Ladies and gentlemen, good day and welcome to Oil India Limited Q2 FY2024 earnings conference call hosted by Antique Stock Broking. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Vardharajan Sivaskaran from Antique Stock Broking. Thank you and over to you, sir.
Thanks, Rohit. A very good morning, everyone. It's my pleasure to welcome all the participants and the management of Oil India to this conference call. We have with us Sri Harish Madhav, Director Finance, Sri Pankaj Kumar Goswami, Director Operations, Dr. Manas Kumar Sharma, Director E&D, and Sri Sachidananda Maharana, CGM Corporate Finance. I'll hand over the floor to Sri Harish Madhav for initial comments to be followed by Q&A.
Good morning, and I'm Harish Madhav, Director Finance in Oil India. We were expecting our Director Exploration also to be present with us today, but because of some meeting in the ministry, he has to rush there. So, anyways, thank you all the participants. Thank you, Antique, for arranging this call. I thank and welcome all the participants to the call. The results have already been shared with everyone yesterday, and I hope the details given and for the results are sufficient. But in any case, in case some queries and some clarifications are needed, we are open for discussion. So with this, I will request my colleague, CGM at Finance, Maharana, to give his feedback, give his opening remarks, opening feedback on the results, and then we can go out with the question answers.
Good morning, dear friends. At the outset, I would like to thank Mrs. Antique Stock Broking Limited for organizing today's analyst call. I am Sachidananda Maharana, CGM Finance and Accounts, Corporate Finance of the company. The company's financial results of Q2 FY24 were published on 8th November 23. I will briefly give some indications about the performance of the company in both physical and financial terms. Now, coming to the standalone results and beginning with the production front, the company has continued to improve its crude oil production, which is higher by 5.7% in quarter ended 30th September 23 at 0.835 MMT vis-a-vis 0.790 MMT in the quarter ended 30th September 22. Crude oil production for the half year ended 30th September 23 has also increased by 5.48% to 1.655 MMT vis-a-vis 1.569 MMT for the half year ended 30th September 22. Natural gas production for the half year ended 30th September 23 is lower by 2.45% at 1,555 MMSCM vis-a-vis 1,594 MMSCM for the half year ended 30th September 22. However, the production during Q2 FY24 has increased by 8.72% over Q1 FY24. On the financial side, average crude oil price realization for Q2 23-24 is $86.86 per barrel vis-a-vis $100.59 per barrel for Q2 22-23. This is decreased by 13.65%. Crude oil price realization for the half year ended 30th September 23 is $82.22 per barrel vis-a-vis $106.53 per barrel for the half year ended 30th September 22, decreased by 22.82%. However, The price realization net of special additional excise duty has remained around $75 per barrel. Average natural gas price for the half year ended 30th September 23 is $6.5 per MMBTU, vis-a-vis $6.10 per MMBTU for the half year ended 30th September 22. The turnover for the half year ended 30th September 23 has decreased by 10% to rupees 10,558 crore compared to rupees 11,737 crore in the half year ended 30th September 22, which is mainly due to lower crude price of $82.22 per barrel in half year ended 30th September 23 vis-a-vis $106.53 per barrel in the half year ended 30th September 22. The EBITDA margin for the Q2 FY24 has increased to 48.29% vis-a-vis 41.12% in the previous comparative period, and EBITDA margin for the half year ended 30th September 23 has increased to 50.52% vis-a-vis 42.85% in the half year ended 30th September 22. The company has taken provision towards disputed service tax and GST on royalty, including interest, amounting to rupees 2,656 crore during the Q2 and half year ended 30th September 2023 on the ground of prudence and conservative principle, resulting in a reduction of profit after tax for Q2 FY24 to rupees 325 crore from rupees 1,721 crore in Q2 FY23. Profit after tax for the half year ended 30th September 23 decreased to rupees 1,939 crore vis-a-vis rupees 3,236 crore for the corresponding period previous year. The earning per share for the half year ended 30th September 23 is rupees 17.88 per share. Now, coming to financial performance of Numaligarh Refinery Limited, profit after tax of Numaligarh Refinery Limited during Q2 FY24 is rupees 736 crore vis-a-vis 728 crore during Q2 FY23. And profit after tax for the half year ended 30th September 23 is 658 crore compared to rupees 2,134 crore for the corresponding period last year. NRL's gross refining margin during Q2 FY24 is $16.04 per barrel vis-a-vis $13.84 per barrel during Q2 FY23. Gross refining margin for the half year ended 30th September 23 is $13.49 per barrel vis-a-vis $23.04 per barrel for the half year ended 30th September 22. NRL's EBITDA for the Q2 FY24 is rupees 1,085 crore vis-a-vis rupees 1,070 crore for the Q2 FY23, while EBITDA for the half year ended 30th September 23 is 1,079 crore vis-a-vis rupees 3,058 crore for the half year ended 30th September 22. Coming to consolidated results, oil group turnover for the half year ended 30th September 23 was lower at rupees 15,225 crore vis-a-vis rupees 21,684 crore for the half year ended 30th September 22. And the group profit after tax for the half year ended 30th September 23 is lower at rupees 2,039 crore vis-a-vis 5,346 crore for the half year ended 30th September 22, which is mainly due to lower crude oil price realization, turnaround maintenance of NRL, and provision made towards service tax and GST on royalty amounting to rupees 2,656 crores. Board of Oil has declared an interim dividend of rupees 3.50 per share on face value of rupees 10 per share. My opening remarks on the performance is over, and now we are open to Q&A. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask question may press star and 1 on their touch-tone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking the question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Propal Sen from ICICI Securities. Please go ahead.
Thank you very much for the opportunity. Congratulations on a strong set of numbers, sir. Just wanted to understand this whole royalty issue. Now, obviously, this case has been going on for long, and we have finally taken the contingent liability into the books. Now, this quarter's provision of around 290 crores has also been made in addition to the past, provision. So is this additional royalty something that we should now be building in for every quarter going forward till the case is resolved or settled in either direction?
Yes, we will continue to take that provision going forward. Already, for the current year, 293, as you rightly said, has already been provided for. That is, of course, including interest. And going forward, we will be continuing quarter on quarter.
So on an annualized basis, sir, what will be the amount we should be sort of roughly building in? Around 500 odd crores. This is for the half year or this is only for this quarter, the 290 crores?
293 crores is for the half year after September. So I think we can maybe double of that, maybe 500 crores. It depends on the crude oil movement also, price movement also.
Sure, sir. Sure, sir. Understood. But at roughly the constant rate, we should be roughly what we should work with, correct?
Yes.
Okay. Thanks for the clarification. The second question was, sir, just wanted to understand what's the reason for the strong other income that has come through in this quarter. Is it NRL dividends that have gone up?
Basically, it is emerging from the dividend income from our shareholding in NRL, Indian Oil Corporation. And NRL has given us the final dividend of last year, which was declared. That was accounted for in current year after the AGM. The same thing is about Indian Oil Corporation. We got about 220 crores dividend from Indian Oil. And another about 400 plus crore dividend from our Singapore subsidiary, which is holding the Russian investments in Concall and TAS. So that is the reason for the other income growth.
Okay. Just to recap, sir, around 220 crores came through from IOCL, around 400 crores is our Russian subsidiary income, and balance about 1,800 crores would have been the NRL dividend. Correct, sir?
Not 1,800 crores.
Not 1,800 crores.
80 odd crores. 80 to around 100 odd crores.
NRL is about 160 crores. IOC is about 220 crores and 400 crores from the overseas subsidiary. In the first half I'm talking about.
Understood, sir. Understood. One last question, if I may, sir. If we can just refresh the guidance of production for FY24 and FY25 and the capex for the next couple of years, sir.
Production, we have an MOU target of 3.8 million tons of crude oil and almost similar volume of natural gas this year. But certainly looking at the current numbers, 3.8 may not be feasible. But we are certainly trying to reach at least 3.5, 3.6 million tons of crude oil by end of the year. And natural gas production, it suffered in the first quarter because of the customer offtake issues, BVFCL, Numaligarh, BCPL, they were all under shutdown the first quarter. Natural gas production and sale has really suffered. We have picked up, as my colleague told about 8.5% growth we have already done in the second quarter. Natural gas, maybe some 3% growth over last year. But crude certainly is about 3.5, 3.6 MMT we are targeting.
Understood, sir. And CAPEX, sir, for the next couple of years?
CAPEX reported number is about 13,000 crores for both oil and NRL put together. About 4,900 is for Oil India and about 8,700 is NRL.
Okay. All right, sir. Thank you so much. I'll come back if I have any questions. Thank you for your time and a happy Diwali.
Thank you. The next question is from the line of Sabri Hazarika from MK Global. Please go ahead.
Yeah, good morning, sir. So I have a few questions. First one is relating to the windfall tax. So what we've seen is that in the last some of the quarters, whatever rate the government basically gives, the book rate which comes dividing your number with the crude production is generally lower. So I asked this question to ONGC also. They said that some inventory related adjustments could have happened. So we were like assuming that, but this quarter I think the rate basically was higher. So is there any accounting related adjustment or anything you'd want to say on this?
The accounting related adjustment, inventory and all certainly will happen. But the windfall tax, whatever is decided by the government, it is paid based on the fortnightly rates. Normally the rates are divided on a fortnightly basis. And as far as maybe accounting part may be different, some corrections, adjustments here and there. But on an average, if you see the rates declared and on a fortnightly basis, last year up to September, current year up to September, the net realization to Oil India has been around $75-76 per barrel. That's how the adjustment is happening. But accounting, yes, there may be some corrections, some adjustments on account of inventory.
Right, sir. So secondly, on this this premium gas pricing premium from APM fields. So any update on that? The DGH committee was supposed to look into it.
There is no update as of now. We are still expecting that some guidelines to be issued.
Okay, so fair enough. And thirdly, on the NRL front, I think this rights issue basically covers the entire equity infusion, or do you think some more instruments will come down the line?
As of now, it covers the entire equity infusion for the refinery expansion project, what is envisaged. And the only thing is that the first call was paid 25%. And as and when the money is required, that also be given by the NRL. But I think the rate issue for the full 100% of the capital commitment has been given.
Okay, sir. And sir, just one small question. Your interim dividend, was there any impact of this whole GST thing there, or it could have been higher if that thing would not have been accounted? Is that the right assessment?
I think it's a question beyond presumption or assessment. If we had not accounted for 2,600, possibly we would have given a higher dividend, no doubt about it. But as a prudence, for a future of the company also, looking into the huge liability, we feel it's a very fair decision on our part to provide for this liability and create a provision.
Right, but the minimum 30% payout that prevails, right?
Yes, the some guidelines we will certainly try to comply with.
Okay. Okay, so fair enough, and thank you so much and all the best. Yeah.
Thank you.
Thank you. The next question is from the line of Kirtan Mehta from BOB Capital Markets. Please go ahead.
Thank you, sir, for the opportunity. In terms of the NRL, have we seen any increase in the OPEX? Particularly when we look at the GRM, this has increased by $2.2 per barrel YOY, but the EBITDA was lower by $0.6 per barrel YOY. So is there any particular increase in the OPEX that has come through during this quarter?
Apparently, there should not be any serious increase in the operating expenses. OPEX we'll let you know the details, but apparently there should not be any significant increase in the OPEX part of NRL.
Yeah, right now it's implying something like a $3 increase YOY, so that appears a bit on the higher side.
$3 increase is impossible. I think there is some issue, something maybe understanding issue. We will clarify that. $3 is impossible to growth in the OPEX. Not possible.
In terms of, you mentioned that we've got a 400 crore dividend from the Singapore subsidiary. So is our Russian dividend which was stuck, that has been released now?
No, actually, Oil India International Pty Limited, the 100% wholly owned subsidiary that is in Singapore, they already have funds with them, which are the dividend received from the Russian entity prior to the embargo. So, from those funds, the dividend has been declared.
Okay. And what would be the quantum of dividend which is currently stuck? Basically, the typical share that we are assuming. So at this point of time, what would be the...
For our share of, you are talking about the ruble funds, second Russia, no? It is about $450 million equivalent dollars, I think.
Fine, sir. And in terms of the Baghjan, we have sort of a committee has, the notes talked about sort of, the committee has sort of submitted the report. So could you also explain us through, are we expecting additional provisions around Baghjan?
We are not expecting any additional provisions around Baghjan. The committee report which has been submitted to NGT, we have gone through that report. And this is of course the first report. And in that report, basically nothing has been earmarked for Oil India to be done. The guidance and instructions are to the Pollution Control Board and the government agencies to work out a plan, etc. But Oil India has not been asked to do anything or to commit any expenditure as of now.
Understood, sir. Thanks for this clarification.
Thank you. The next question is from the line of Abhishek Nigam from Motilal Oswal. Please go ahead.
Yeah, hi. Thank you so much for the opportunity. So, first question, just on the exceptional item. So, I understand that contingent liability was there for a while. Has something changed in the last 2-3 months that you've taken this now? So
no.
That's my first question.
No, sir, actually what has happened, as you have rightly pointed out, there has been some amount of change has been there between the contingent liability that was earlier reported and the amount which has been charged off to the profit and loss account in terms of exceptional item this time. This is basically on account of accounting for the interest on the amount that has not been deposited by us in the state of Assam and Arunachal Pradesh in view of the High Court stay order. So that has also been accounted for along with the liability for service tax that was reported as a contingent liability earlier.
I think his question was from contingent liability taking provision, what has changed? No, not the number. Reasoning.
So your voice is not very clear.
No, I think you are looking for the reasoning for taking provision instead of contingent liability, or you are looking to difference in the number?
I'm just, wondering why have you taken it now? Has something changed in the last 2 months?
Yeah. See, we were expecting a hearing on merits in the Guwahati High Court, where the largest chunk of this disputed demand is pending. But somehow that merit hearing didn't take place. It has further been deferred, and we don't know when it will happen. And looking into the amount of liability, we just indicated earlier about 450-500 crore annually, depending, of course, on the crude price movement. So it was thought of that we should provide for this money rather than simply accumulating in the contingent liability.
Fair enough. And sir, you provided revised FY24 numbers on production. Can you give us a sense of FY25 as well for oil and gas?
It will be difficult to say anything, but looking into our performance, certainly we will be growing in the volume. Maybe you can expect some 4-5% growth over the current year. But current year, if I say 3.5, 3.6, Over and above that, having 4% growth itself will be close to 3.84 million tons of crude oil. But I can't commit any such volumes as of today.
Okay. Fair enough. I understand. And just the last question on the GST on royalty, is it possible to give us the rate at which the GST applies? Is it 10%, 15%? So, then we can make our own estimates.
It is 18%, sir.
18%. Okay.
Yeah.
Okay. Perfect. Thank you so much. That's it from me.
Yeah.
Thank you. Before we take the next question, we would like to remind participants that you may press star and one to ask questions. The next question is from the line of Keval Doshi. Please go ahead.
Hello, am I audible?
Yes.
Would want to understand the status on new oil field discoveries within India and also on the status of the project at Mozambique.
Can you kindly repeat the question, please? It was not clear to us.
Yeah, so wanted to know the status on new oil discoveries within India as well as outside India. Especially on what's happening on the Mozambique project.
See, Mozambique project and outside India, let me first cover, there is no oil discovery as of now because all these projects are already discovered and under development or under production. Like Russia is under production, Mozambique is already discovered, it is under development. So outside India, there are no fresh discoveries, no fresh acquisition also by oil India. Domestic part also, 1st April to September, we have not made any discovery as of now. But exploration activities are on, so certainly there will be some discovery. It's anybody's guess. But still we hope that there will be some discovery. We add something to our reserves. A reserve replacement ratio, certainly we target is also to keep it on a positive side. It's more than 1. So certainly that we will be achieving. As of now, no fresh discovery has happened.
Okay. And is the work on the Andaman Nicobar blocks yielding positive outcomes?
It's too premature to say anything about Andaman because only the GNG studies, seismic studies have been done. Based on those studies, we will be drawing our exploration drilling program. And drilling can happen only early, mid of next financial year. Somewhere in after June, July 24, sorry.
June, July 24. Okay.
24. We expect to start the exploratory drilling in Andaman.
Okay. Thank you so much.
Thank you. The next question is from the line of Hardik. Please go ahead.
Yeah. Hi, sir. Can you just share the explanatory write-off being provided for the quarter? And the second question is, what would be our gross NR and GRM, including excise duty?
So, including excise duty numbers are not available with us. Otherwise, the core GRM, which is the main indicator of refinery performance, that has already been indicated by our colleague. I think it was $13 for the first half. You can repeat that. $13.4 for the period April September.
Yeah, and what was the explanation write-off provided for the quarter?
How much is the write-off?
Yeah, this is only write-off. Actually, this quarter we have not taken any write-off. The only about 2-3 crore provision has been taken in this quarter.
Okay, thanks, sir. That's helpful.
Thank you. A reminder to participants that you may press star and one to ask questions. The next question is from the line of Somya from Spark Capital. Please go ahead.
Hello. Thanks for the opportunity, sir. So first question is on the Concall debt. Can you give a breakup between upstream and NRL debt apart from the standalone? Hello?
Yeah, just 1 second.
Sure.
Our Oil India's borrowing total, the standalone borrowing is about 11,000 crores. And at our subsidiary level in Singapore, it is another 4,000 crores, basically $500 million. And in dollar terms, the domestic borrowing of Oil India is about it is 11,000 crores for the All India standalone domestic. Sorry, not domestic, it's all overseas borrowings. And our overseas subsidiary in Singapore has another 4,000 crores worth of borrowing. And Maligarh also is, I think, about 3,000 to 4,000 crores. 5,643 crores has been drawn. 5,600 crores. So total consolidated debt is about 20,000 crores.
Okay, got it, sir. Sir, in terms of the Numaligarh expansion capex, so what would be the quantum that you would have spent so far, and how would we, the next 2 years, how would we kind of spend the remaining amounts?
The total capital commitments for Numaligarh is about 28,000 crores, out of which actual expenditure till today is about 13,000 crores, you can say. Actual expenditure till September is about 13,000 crores.
Got it, sir. And this the remaining amount that needs to be spent would be completed by most of it would be completed by FY25.
By FY25, yes.
Got it, sir. And what would be a normal in a normal mode maintenance capex for NRL, keeping aside the expansion project?
Not very much. Maintenance capex is maybe few hundred crores only, nothing much.
Got it, sir. And in the upstream, the E&P operations, domestic E&P operations, still we can continue to think about 4,500 to 5,000 crores as run rate capex for the next 1 or 2 years?
Yes, approximately that level.
Got it. Sir, also the international assets, any update that you can give in terms of the operational performance, the Vancor or the Russian assets, and also any equity contribution further required in any of these assets?
What was the second part? Any additional what you asked for?
Any additional contributions that we need to make in any of these assets?
For Russian assets, no additional contribution is expected from our side. And as far as the operating performance of those two assets both are performing in line with the estimates at the time of their acquisition. So there is no adverse implication. In fact, our asset has performed better there. They were expected to produce peak production of about 5 million tons per annum. They are producing more than that.
Got it, sir. Any color in the last 6 months in terms of what would be our share of earnings from these assets? Just trying to understand what is the run rate cash flow from these assets for us.
We can only tell about the dividends which have been declared during the current period. Otherwise, expected cash flow and all, it depends. Russia, we all know there are issues, pricing related issues. So projecting the cash flow will be difficult. Only thing, the dividend numbers, if you wish, we can share with you. What dividend has been declared and paid to us.
Got it, sir. And also these assets, generally the oil pricing for these assets are, below the benchmark. Is that a right understanding, sir? The Russian assets are fetching lower realizations compared to the international benchmarks. So the dividend that whatever we have received have been on a relatively lower oil price. So is that understanding right?
That's true. There is a cap on sale of crude from Russia. So definitely the realization will be lower. And based on the earnings, these companies will be declaring the dividend.
Got it, sir. And from Mozambique standpoint, any equity that we need to further infuse in the next 1 or 2 years? Any requirement for?
Board approved number was 1.8 billion, out of which we have already invested around 1.4 billion. And at the project level, already the operator is in the process of starting the activities. And once this force majeure is lifted, we will be able to get the funding from the ECS there. So once the funding starts, most likely the equity contribution from the partners will be reduced.
Got it, sir. Thank you. Very helpful. Thanks.
Thank you. The next question is from the line of Vikas Jain from CLSA. Please go ahead.
Hi, sir. Thanks for taking my questions. Firstly, sir, if you could tell me the seismic cost for this particular quarter, since that's something that I...
Yes, seismic cost for this quarter is about 110 crores, say.
110 crores, is it?
Yeah.
And the previous quarter and the YOY comparison?
Previous quarter was around 150 crores.
Okay.
And
last year?
Last year it was previous quarter. Last year corresponding quarter was almost 105 crores.
Okay, understood. Just one more. So what has happened in the interest costs that have gone up this particular quarter? Is it the accounting for this interest on the GST, that royalty thing? Has that been accounted in interest cost, and that's the reason why there's a 35% QOQ jump in interest? Is that what is causing it?
Like interest cost, you are saying finance cost?
Finance cost, that's right. Interest as in the finance cost. From 166 crores, it's gone to 224 crores. What has happened over there? Is it this GST thing only, or is there something else?
No, one issue is that there was some exchange gain accounted for in the first quarter accounts on account of finance cost related exchange loan. So that is the reason in the first quarter the finance cost was lower compared to the second quarter.
Okay. So and what is the exchange variation included in interest in this particular quarter?
Yeah.
No, what is that amount, the forex variation included in interest in this quarter?
It is about 38 crores.
38 crores.
Yeah.
Okay. But still it's pretty, it's a reasonable jump on a QOQ basis.
Yeah.
So is this going to be the kind of run rate that we look at, about, over 200 crores type every quarter from here on?
No, as you know that one of the reasons for interest increase also is the increase in the benchmark rate.
Yeah, of course. No, I'm saying that if the benchmark rate stays where it is, then a 200 crore kind of a quarterly number is something that we should be looking at?
Yes.
Okay. And other income on a QOQ basis has declined by 35%. Is it that last year's NRL dividend was much higher? Is that the main reason, or is it something else?
Yeah. Actually, last year corresponding quarter NRL dividend was much higher as compared to the dividend that we have received this quarter. Because there is a gap of about 400 crore in the dividend received from NRL last. But that has got compensated to a much extent by the dividend that we have realized from our Singapore subsidiary, which is roughly about 200 crore we have realized this quarter.
Okay. But even after taking all of this into account, so the EPS for first half is closer to 18 rupees, but the dividend is only about $3. Is it that, maybe we typically are second half heavy in our dividend payments? Is that how we should think about it?
No, actually, if you see the first interim dividend that we had paid last year was around 4 rupees 50 paise per share. And the first interim dividend this year is 3.5, and that is after taking this provision of 2,600 crores.
Okay.
So that way, as already our DSR has told that we will try to comply with the DIPAM guidelines, which is 30% of PAT or 5% of net worth, whichever is higher. So overall, we can see afterwards.
So because I will also add, last year, first half, our EPS was around 34 rupees.
Understood. I saw that. Yeah, I realize it. So basically, the second interim is typically much higher for you guys, so that's something which we should be looking at.
50%.
Yeah. Okay. Thank you, sir. Thanks a lot.
Right.
And happy Diwali.
Thank you.
Thank you. The next question is from the line of Mr. Vartaranjan Sivaskaran from Antique Stock Broking. Please go ahead.
Thanks, Rohit. So, on the production guidance, we seem to wound down a little bit. Any specific issue which you want to highlight? Why this would be so?
No, there is no specific to that. Production, we are expecting that crude production should be around 3.6.
3.5 to 3.6. And if I were to look at the next 2 years, any numbers that we should actually build in?
It will be difficult for us at this point of time to talk about any future beyond current financial year, any future numbers. It depends on a lot of things. If any new discovery happens and the drilling results, whatever we are doing. But efforts certainly are our part to continue growth in crude oil production at least 4 to 5% annually over next 2-3 years time frame. That is what internal target is there, and hopefully we'll be achieving that. But giving any specific number at this point will be difficult.
Not a problem, sir. On the Venezuela thing, now that the sanctions seem to be released, one is about are we looking at a capex, and secondly about the pending dividend.
So right now, of course, there are certain positive developments in Venezuela, but the activity in the block that we have has not started as yet. The production is much lower. We are reviewing the position, and perhaps in next 1 or 2 quarters, we have some more clarity on the prospects there.
And the pending dividend will be used for any additional capex, or would that be released to you?
Additional capex will happen. You are talking about Venezuela. Additional capex will happen only if the project activities they start moving up. So what will be the time frame and all? It will be very difficult because we are still studying, trying to examine the effects of this ease in the sanctions issue. So it's very early to say whether. But if yes, commitment, we can indicate that we have a total commitment for 425 million. 56 million is already, about 60 million is already spent. So in case the project picks up further, then yes, future capex will happen. But the time frame when it will happen will not be able to say.
Good. On the Mozambique front, obviously there's already a talk about escalation in the cost potentially. So incremental cost, would it largely be raised as debt at the entity level, or would they be calling you for equity contribution?
It will be largely on debt basis.
Okay, thanks.
Thank you. As there are no further questions, I would now like to hand the conference over to the management for closing comments.
Thank you very much once again, Antique and Mr. Varadarajan, especially for hosting our conference call. And thank you all the analysts and investors who joined our conference call, for joining us, for seeking clarifications, for questions, etc. And we are open to answer any further queries. You can always refer back at any point of time you want. And I hope our results have been satisfactory, or we feel it's better than satisfactory, because except for the exceptional number that we have indicated, 2,600 crore provision, otherwise the operating and financial performance of the company has been consistently better over the last 4-5 quarters. So we assure the investors about the continued sound performance, and the concerns on the dividend part also. Let us be assured that we will be meeting dividend expectations of the shareholders, of the investors, and in line with the guidelines that are there for dividend distribution by the government. So thank you very much once again for everyone for joining, and thanks, Antique, once again.
I would like to hand the conference over to Mr. Varadarajan Sivasakaran for closing comments.
Thanks, Rohit. I'd like to thank the management for giving us this opportunity to hold the call, and thank all the participants for joining in and asking very interesting questions. Thanks, everyone, and have a nice day, and wish you a very happy Diwali.
On behalf of Antique Stock Broking, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.